The sub 2 plus the midterm rental insurance strategy, I believe, is almost like the untold secret in this industry that you need to know or be aware of how to get these deals in order to be able to maximize your monthly cash flow, your return on your investment, your cash on cash return, however you measure it. There's large spreads and large margins to be made with this strategy. Now, we're combining two strategies at once. They are not difficult, but you just need to know how to go about it. And specifically, what I like to focus on is the who you need to get to in order to be able to tackle these opportunities. And I'm going to tell you about the case study that we just closed on, a creative finance deal, and then applied the midterm rental strategy. But I'm not going to stop there. I'm also going to show you how you can actually apply the midterm rental insurance strategy to be able to get these large spreads. So all at once, sub 2 plus midterm rental insurance all at once. So I want to get this to you in the next 5 minutes so that you can be super clear on how this deal went about, get clear on the numbers, and get clear how this can apply to you within your marketplace. And then most importantly, if you do want to get more resources, I actually do have this on my podcast, The Real Estate Experiment, episode 250, where I go into detail on the opportunity that I believe exists in the marketplace. But however, I am still experimenting this. I thought this would be, when I hear creative financing, it sounds good. You hear it on podcasts, you kind of hear other people do it. And then when you go through it, you're kind of like, that's pretty cool. It's possible. It exists, right? It's always like this myth, like seller financing. Like, who's done that, right? I sure haven't done that yet, but I've done a sub 2 deal and I want to show you the receipts and show you how it was done. Okay. So first things first, I surround myself with experts. I don't even call myself an expert. I have expertise in the midterm rental insurance space. I certainly do not have expertise in the sub 2 space. However, I do have experience in it now that I've done the deal, so I can tell you about that. I do want to reference an expert in our space. His name is Pace Morby. I'm currently reading this. I think it's genius, but what is also genius is to be able to actually know how to combine these strategies, right? There's an expert in a specific space. There are multiple experts, but how do you assemble it with respect to your strategy? Our specialty is midterm rental insurance contracts. We're landing anywhere from 3 to 5x what traditional rental would be with corporations. When a tree falls on your home, when a pipe bursts and a family needs to relocate, they go to their insurance company, and the insurance company works with a relocation specialist agency or a temporary housing agency where they don't provide the housing, but they look for those who provide the housing, and that's how they get to us. That's what we specialize in. We work with some of the top insurance companies in the nation via the relocation specialists, whether it's Ailey Solutions, THD, CRS Housing. There's a bunch out there, even in your local market, and that's who we form the relationships with, so that we're getting 6 to 8 months, even 9 months, starting with one, typically extends over and over again, and we're getting large margins, such as, for context, a $1,900 mortgage per month. We're getting anywhere from like $7,000 to $8,000 a month with corporate contract, which means we have 100% occupancy and high profitability per month. Margins such as 4 or 5K a month is not unheard of for us. It's actually very typical, which is cool. But now it's like, okay, in this economy, this is why I see the opportunity, because like, how do we continue to buy in this economy? The last deal that we did, we had a 7.5% mortgage rate on that. Wasn't as sweet as the one that we got when it was 3.2, 2 point, whatever the numbers were. Can't believe I'm saying even in this now, in this day and age, as you're listening to this in Q4 of 2023, if you are. Nonetheless, this is evergreen content, because I do believe that until these rates come back down, this is the new reality. So what does that mean for you if you're looking to invest strategically and not stop investing? Because we all know that in real estate, buy real estate and wait, but don't wait to buy real estate, right? So how do we continue to acquire? And this is how I came across this. How do I get across this creative financing? And honestly, I got lucky in the sense, created luck. I do network constantly, and the deal was brought to me, right? But there is a way that you can get these deals. Now we talked about the midterm rental insurance opportunity, which if you're on this page, you probably already know it. If you've been following, there's tons of videos about how I go about finding these midterm rental insurance contracts and how to foster relationships, what databases I go to, etc. But let's talk about the combined strategy. What is sub 2 individually? Sub 2 is not so much assuming a mortgage, but it's actually you start making payments on behalf of the person that is no longer able to to live in that home. They're trying to sell it and get rid of it. There are multiple reasons why, and this is why it gets very creative. There's case by case situations. Sometimes they're behind, and you got to make up for the payments. When they're behind their payments, you got to make up for those. Sometimes they're kind of a conversation that naturally turns into, hey, would you possibly be interested in me taking over your payments? And I give you a certain amount that you're okay to walk away with, that we all kind of negotiate and agree with, right? So a lot of these homes right now are sitting on the market because the interest rates are too high. So this is where there's an opportunity where tactically, if you want to go ahead and go get these deals, you can speak to your local realtor, you can speak to a homeowner who's selling your home. But typically it's homes that are sitting on the market that are trying to be sold and they're 60 days plus expired. And this is what Pace Morby talks about in his book too, right? And he talks about it in tons of his video content. Follow him, he's the expert for that. But for me, I'm taking it from this expert, bringing my expertise in the midterm rental insurance space, and I'm putting them together. But here's why it's even more important, and I really want to bring this point home, right? When you're doing a sub-2 deal, there's a lot of different situations where you put the money up front, whether it's 30K, 50K, 100K, whatever it might be. Sometimes it could even be very low depending on their situation, because maybe they have 2 mortgages, or they're trying to get into a new home, or they relocated across the country and they can't afford to have 2 mortgages. And because it's sitting on the market and it's not selling, they're still paying for 2 mortgages, which is a lot for people. So they would rather have just an exit strategy, get a lump sum up front. Maybe it's not the top tier that they were going to get, but then they still get to walk away with what they want. And now you've alleviated them from having the headache of having an overhead that they can't afford, or maybe it's just not conducive in their specific situation. That's one of many different cases. Another could be maybe they didn't even have enough equity in the home and they had to do a very quick move, that by the time they give the 3% to the seller agent and another 3% to the buyer agent, which is a collective of 6, they wouldn't even break even, right? So it's like, okay, maybe I don't do that and I go another creative route. So there's multiple reasons that could even come up. We'd be here all day if I were to state the reason. In short, this is why it's a win-win situation that you have to create, but a lot of people are not educated on it. A lot of homeowners who are selling. Therefore, it's important for you to educate yourself. Another plug. Again, no affiliation. I just like to go to the source for that. Maybe we can get him on the pod, tag him below, get Pace Morby on the podcast. That'd be amazing. But how does this strategy exist? Let me tell you about this deal that we just did, okay? This was a deal that came through us. Typically in the midterm rental insurance space, if you watch some of my other videos, we do love to have 4 to 5 bedroom homes. Don't take it from me, take it from the data. We believe that we're solving a larger problem when we have 4 bedroom, 4 to 5 bathrooms, 4 to 5 bedroom homes with 3 bedroom plus, because if a family is in need of relocating, right, due to a tree falling in their home or pipe bursting, water damage, etc., it's a bigger problem. It's harder to move a family of 5 with 2 dogs into a hotel if they even have the availability and are pet friendly. It's easier to fit a family of 5 into a 5 bedroom home, but it's not easy to fit a family of 5 into a 3 bedroom home. So we typically go for larger homes. However, we were not going to pass this deal up. We took this 3 bedroom home with no hesitation, and here's why. Numbers for a second. Picture will be here of the home, right? Boop, 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 boop. This is the home that we closed on. 3 bedroom, 2 bathroom, located here in Georgia. Asking price was $360,000, which is a little bit higher than what they got it for. But here's the gig, right? This home, they wanted $18,000. I know it feels like a steal, but here's why it even gets sweeter. So exactly, they wanted $17,593 as a down payment. Now, keep in mind that the person who brought this deal to me, shout out to Z. So out of that $17,000 and $593, $7,000 went to the finder's fee. So really, the owner is selling that home for 10 grand. Why? Different scenario. They need to purge their portfolio, etc. All good. Their business becomes our treasure, right? Because in this case, they're essentially, we're buying this home, and currently there was a guest that was there. You guessed it. It was in an Airbnb, and they had furniture in there. And guess what we negotiated into the deal? To include the furniture. We typically furnish those properties for literally around that sweet spot, $18,000 to $24,000, right? Crazy. So because again, we're in a corporate housing, so I should say more midterm rental, so we don't go crazy fancy, but it's functional, durable, clean, crisp. See the pics. But this home, we got the furniture. So essentially what we're getting, we're basically buying this home for the amount of that we will buy furniture for, right? Crazy. But here's another thing that you got to keep in mind. They did structure a balloon payment for 5 years. Now they wanted to get their equity out. Their equity is just around $109,858. Now, we did negotiate, we did rent a sewage scope. There was some work that we want to get out of there, so we subtracted that from the 100, I think it was around 115K at the time. Subtracted from that, negotiated that in there, which means in 5 years we owe them $109,858. Why are we okay with this? Because this 5-year balloon comes at a 0% interest. All that means when we say 5-year balloon, it means that we owe them $109,858 in 5 years. It's almost as if we got literally a 0% down credit card. We can spend $109,000 for the next 5 years, and then you pay us the full amount in full in 5 years. Why are we comfortable with this? Well, because we are taking over mortgage payments. The mortgage right now has a 5% interest rate, and it's $1,909.17. So $1,909.17 per month. Typically, I told you in our area, we're very, it's not unheard of for us to have $7,000 to $8,000 contracts. On a 3-bedroom, we've gotten closer to $4,000 to $5,000 a month, right? We actually got an inquiry. I'm not gonna make this up. Maybe we'll put it up here for $4,500, or at least an inquiry for $4,500 a month. However, we couldn't even accept it while we were on the contract, because we actually had an Airbnb guest that was currently in there that was going to be structured into the deal. That's right, cash flow from day one, paying us $101.45 per day, which comes down to them extending out until it was 5 months out for $15,000 or $20,000. But we give them a discount with the monthly discount, etc. So we're going to take home $15,575.28, which means that per month we are making just over $3,041, right? To me, that's right out the gate a $1,134.33 in cash flow per month. And I did a little average in that, more or less, because utilities, etc. But we're cash flowing just about $1,000 a month on a home that we just bought, literally with furniture included and with a midterm rental guest included. Now, I cannot make that promise that you would have a midterm rental right from the jump, but we know that that was a traditional midterm rental, not a corporate insurance midterm rental. So what I'm trying to show you is that that spread of $1,000 a month can quickly turn into $2,000 to $3,000 a month based on us just reaching out to the corporation the way we always do. And there's plenty more video and content on how I do that, where you can tap in, get my midterm rental insurance blueprint below, where you can see how we're able to actually reach out to these corporations and who they are, where we go. But that is how we were able to get a sub-2 deal and apply a midterm rental play, not midterm rental insurance, which is truly what we're optimizing for. I believe that if you take a midterm rental insurance strategy and the sub-2 strategy, will allow you to continue to invest in this marketplace, in this economy with high interest rates, and continue to protect your margin so that you can have that high cash flow every single month come in. It is a process. Again, key takeaway for me, biggest key takeaway, it's not necessarily for me to start finding these deals. It's for me to actually tap in to the Pace Morbies community. When I say tap in, I mean network. Connect with someone who's already in there, because here's the biggest key takeaway, the most important that I save for last. I always think of who, not how. So if there's people who are in that group, in that mastermind, who do not know the midterm rental insurance strategy, it means that they're trash. When there's a deal that makes no sense to them because they're running long-term rental numbers, it will become your treasure, because when you run your short-term rental and midterm rental numbers, we like to do both. We like to have 2 exit strategies. Your margins will be significant enough for you to take on a deal, and you then will be willing to pay any assignment fee, right? As you should. We paid $7,000 for the finder's fee, and it will still make sense for you in the long run. That's where I believe the opportunity is. Think who, not how. You don't have to be a sub-2 expert. Connect with the sub-2 experts in that community who are not looking at the sub-2 deals with the same lens that we have, with the knowledge that we have. And if you happen to be in sub-2 community and you see this, then you need to start understanding how to apply the midterm rental insurance play as an exit strategy and tap in. You can also follow this channel because there's tons of free content on it as well. hit the subscribe button, get your midterm rental insurance blueprint that will give you a lot of the insights and at least give you proximity to a lot of the content when we talk about midterm rental insurance and why we're geeking out about it and why we think it is the next opportunity that you're going to see a lot of Airbnb guests flow towards because of the regulations and just the marketplace cooling down with the Airbnb. Those crazy wild west days are over and people are coming to a realization that the margins are not as large as they thought they were. This is, if you are an Airbnb host right now and you're not applying the midterm rental strategy, the two can coexist. The midterm rental insurance strategy gives you the largest margins. That's the one that we optimize for. Subscribe for more content and make sure you combine so that you can have the best of both worlds. Let's build.